Hi, I'm Courtney Ellington, and this is for the video exam for Accounting 430. So I'm going to start off by listing the accounting assertions. So the first one is existence and occurrence, and this is defined as assets, liabilities, and equity interests exist in recorded transactions and events have occurred. The second one is rights and obligations, and this is defined as the company holds rights to the assets and liabilities are the obligations of the company. The third one is completeness, and this is defined as all assets, liability, equity interests, and transactions that should have been recorded. The fourth one is cutoff, and this is defined as transactions and events that have been recorded in the correct accounting period. The fifth one is valuation, allocation, and accuracy, and this is defined as all transactions, assets, liability, and equity interests are included in the financial statement at proper amounts. And the last one is presentation and disclosure, and this is defined as accounts are described and classified in accordance with general accepted accounting principles, and financial statement disclosures are complete, appropriate, and clearly expressed. Next, I'm going to go through the audit plan. So the first step is to plan the audit. And here, audit planning begins with determining the requirements for the engagement, including financial statements to be audited, any other requirements, and the timing of the engagement. Step number 2 is to obtain an understanding of the client and its environment, including internal control. Here, auditors should gather sufficient background information to assess the risk of material misstatement of the financial statements and to design the nature, timing, and extent of further audit procedures. Step number 3 involves assessing the risks of material misstatement and design of further audit procedures. Here, auditors use their understanding of the client and its environment to identify account balances, transactions, and disclosures that might be materially misstated. Step 4 is perform further audit procedures. Further audit procedures include a combination of additional tests of the controls and substantive procedures relating to account balances, transactions, and disclosures. In step 5, you complete the audit. The auditors perform a number of procedures near the time of the completion of the audit. These procedures include completing the search for unrecorded liabilities, completing the review of minutes of meetings, performing final analytical procedures, completing the search to identify loss contingencies and subsequent events, and obtaining a representation letter from management. Finally, overall audit findings are evaluated to arrive at a conclusion as to whether the financial statements follow generally accepted accounting principles. Step 6 is forming an opinion and issue the audit report. This is the final step in the process, is the issuance of the audit report based on the conclusions reached in the preceding steps. So, for example, public company recording requires reporting on internal control and on the financial statements, and non-public company reporting ordinarily involves only reporting on financial statements.